sure if you follow the way the financial media covers tariffs or whether you view the way the financial, phrase this gently. Given these things, how can you call him pro-business? He is pro-tariffs, not pro-business. Because you would simply think based on the way the coverage of tariffs is presented. Yes, I mean it's a reminder that it's good to carry a heavy stick, and I believe tariffs have shown to be an effective negotiation instrument. It's toxic. Other nations have apparently taken some proactive steps here. Generally speaking, I also don't believe the current White House plans to implement any measures meant to compromise business profitability. Thus I believe that finally, whatever is achieved will be favorable for businesses. That's really intriguing. All good, hopefully, everyone is listening. Mega cap tech has big week ahead, as you are aware. We will begin making profits on the 29th, that day Meta and Microsoft will report. Bill Baruch. You sold the quads. Sure, before these copies, why? Well, this relates to that rotation I mentioned. Right in that tactical ETF sleeve, we still own a lot of tech, and I believe in what we will see even though we are selling the Qs and moving that money into industrials. We are after all revolving here. We cut Apple, I discussed this on the podcast the first week of the year. We also cut Nvidia, and I believe the outcomes will be really strong. These companies are going to perform in my opinion. Still, how much have we seen pricing in here? You read a lot of this past week, regarding White House artificial intelligence projects. Microsoft's up 4 yesterday, Nvidia's is up 4 as well. The Oracle has had a remarkable week indeed. Many of this is thus being pushed in. But part of the story with regard to the Federal Trade Commission continues to devolve and make it hard to know. And given our historical view, these names ought to be in portfolios. And if you want to outperform the S&P, you have to still hold these. But it's how you rotate and how you manage it as things go. Alright Josh. How should we think about these names moving into a pretty key earnings season here? Look, these stocks, every time we think there's going to be some sort of a move out of these stocks in size, maybe you have one or two of these names collapse, like an Apple or a Tesla lately, but as a pattern they simply continue to be bid, and I believe it's like we have witnessed this internal rotation, not an accident. Within the major 7, or if you wish to extend that out, like the largest 20 technology businesses thrown now into there, which appears unbelievable. Service now finds place among them. Alphabet looks fantastic once more. You know, maybe that's money coming out of the Teslas of the world, or maybe it's just people still feeling good about their investments in these stocks, as they let you play both offensive and defense. Right, present Alphabet has an RPI of 64, it exceeds both its 50 and 200 days. On the year it's up 6%. People say, alright, maybe this is the time I want to purchase a less expensive Mag 7, so I'm going to buy Alphabet, 26 times trailing PE, vs Apple, you know, closer to 40. That will thus be much evident during the course of this year. It has been happening throughout the past 2 years. You should not find it shocking. For the same reason I too find Amazon looking fantastic. Not one of the cheaper names in the list, but one of the names people are really enthusiastic about for 2025. Wolf Research says they predict ongoing tech domination this earnings season. I mean, the elephant of the room frankly is Apple, which has had a bunch of downgrades lately, as you know. Its poorest month since December of 22 is under progress. Until recently, it was the biggest market cap corporation in the world. Today, Nvidia a day or two ago surpasses it. Now in risk of falling to number 3 behind Microsoft due to current problems. As you would expect, Dan Ives is defending Apple today, right on schedule. Fear is exaggerated. The cards show a China turnaround, though he also doesn't think there's cause to get tactically bullish about reports. Morgan Stanley's Eric Woodring is reluctant to term earnings season a quote clearing event. Bill, what do you suppose Apple's future direction holds? At this moment I believe it to be the one most likely to have proof. Indeed, here once more is his name. I'm looking at it right now actually. We cut it. And I believe you have to start monitoring Apple when it starts to lose affection. And right here I believe support is really strong. Indeed, the iPhone 16 cycles could be disappointing, but at the same time I believe you should consider putting it here, when such disappointments start hitting front-page headlines and depressing the market. And it's good we're not seeing Apple trading 250 plus into results. It allows it room to beat and perhaps react. I wish to discuss when Wolf Research states supremacy on things, and when others claim dominance. Hearing them define that would be great, since domination in 2024 meant the following. Including these 7, the top 10 equities in the S&P came out to be at 48%. Thus I am correct, the overarching equities in the S&P came out to be at 48%, the other 490 in the market, all the others were at 10%. Do they believe that dominance implies 50% instead of 10%, or in line with our widening dialogue does it drastically narrow? And dynamically, I also believe dynamically. You believe it will considerably narrow? Dramatic. I cannot see how that kind of supremacy keeps such degree of difference. No, not at all. No, why must it be of such scale? You just remarked sharply implying that what was 48 to 10 will suddenly be 15 to 13. Exactly. That seems more reasonable, not less. No, in fact it doesn't. Alright, now let me explain why I believe it does. For these reasons then I find it more reasonable. 1. Let us consider the S&P collectively instead of separately. About 40% of the S&P are those 7 plus a handful more. Plus, like Berkshire, JP Morgan. One can go back 50 years. Such a tiny group of enterprises has never dominated so much market share in any one period. Look at the NEAT 50 and go back to the 1,970. S50 stocks accounted for just 50%. For this level of concentration, moreover, there is no precedent. You then grab that, and pair it with the industrial talk we were having, and you view companies like Apple, or to be honest like Microsoft, your entire way of thinking, and hence your entire way of talking to yourself. Today, more than 50 companies are caring about something, and Microsoft trading at 31.5 times earnings, hence seems great when considering their earnings development. 10% next year, 15% next year, 18% the year after that. You look at industrials though, they're doing that other 490, and you go, okay, they're trading at 10 multiple points lower, and they have collectively 19% earnings growth. Your missing puzzle component is gross margins. You possess the entire riddle. One piece is missing, it lies on the floor under the couch. Whether or if this kind of outperformance can sustain the degree to which it has, depends mostly on gross margins. Margins of a firm like ServiceNow are unlike those of any industry in their wildest aspirations could ever reach. Wait. Which explains why investors still bid stocks like that either correctly or incorrectly. Just searching. At now, I have 3 non-Mag 7 tech stocks. You can't tell me any of the industrials would ever have the gross margins these companies have, and that's why people are paying more for them, Jenny. Wait, I read it, CrowdStrike and IoT. I have Samsara and CrowdStrike. The issue is though, there is a very significant subtlety. You mentioned that people are paying I was going to inform you nevertheless the degree of their payment. Alright, I would contend they paid their dues. Indeed, they have progressed it forward, and what happens? These firms come out with 20, 30, 40% earnings increase. No, although they are not. No, but you refer to the ones you actually follow. I'm referring to names you hardly know the tickers for. Oh no, you are validating my point. You are speaking of Microsoft. You are validating what I am suggesting. How, therefore? You are validating my claim since the people I have never even heard of fall not in the top 10, yes. Hence we are discussing megacap technology. The CrowdStrikes are really large. In relation to the $3 trillion market cap we have been discussing, how big's CrowdStrike is, though not $1 trillion, it is not $10 billion either, you have 3 times in mind? And like truly let Apple and Microsoft run for it? Allow me to state this differently. You are exactly validating my argument. Allow me to state this differently. That's in the other 490. Let me state it straight out. My point is that although these earnings from the big tech companies will be fantastic and solid, these industrial companies might not even have as good earnings. Nevertheless, the America First agenda that we are seeing and discussing this week will generate the flows that will benefit these industrials. Surpass in the following several months. Correct point. Alright, but let me put you in place here. Dominance is the percentage of S&P 500 earnings derived from industrials against those derived from not only Mag 7, semis, software. It seems to be night and day. You might thus be optimistic about both, but Wolf Research suggests that domination is still most wise call. But just what degree of dominance? Let me ask you though, thus, throughout our argument on, in December I'll tell you, uncertainty surrounds me. Alright Josh, but... Alright, now here is the last quick point. Do you therefore truly believe 50% in 2020?